Hello everyone, this is Joe again from DailyCoin. Today we have a new topic which is how to trade using RSI or Relative Strength Index. Before starting our lesson, as always, we need a small favor from you. Please like and share our videos and subscribe to our YouTube channel to get a new notification whenever we post a video. So let's start with our lesson. What is an RSI or Relative Strength Index? Down below, or you can see here at the bottom of this graph, we have an oscillator. This oscillator, it is called as RSI. It is a momentum indicator. We have this trend line that bounces between 100 and 0 level. Okay, the highlighted levels are 70 and 30. We will talk about them later in this video. So all you need to know, it is a momentum indicator that shows how strong a certain trend is. What is the formula behind this trend line? So the formula is simple. We have RSI equal 100 minus parentheses 101 minus average gain and divided by average losses. This is average losses. Okay, I will insist always that you should not know much about the formulas and the calculation, but our job is telling you how this trend line is calculated. So we have RSI 100 parentheses minus 101 minus average gain over average losses. Okay, the average gain and average losses are calculated based on the length of the RSI used. The most common one is 14, and if you are on the daily time frame, that means we are seeing the average gain. We calculate the average gain over the last 14 days and average losses over the last 14 days, and then we fill this formula and we get the RSI of each day. So based on the closing of the today's price, you will get a series of data point and then you will link them to get this trend line. Okay, so this is how this trend line is calculated. The most important thing is to know how to use the RSI. Today, we are going to cover the overbought and oversold technique, the most common one. In another video, in a part 2, we will cover the divergence in RSI. So today, we will stick to the overbought and oversold technique. So how this works? Whenever the market goes below the 30 level, this is the 30 level, we say we are in an oversold statement or status. Okay, so whenever the market goes below the 30, we have an oversold status. That means most probably market will make a pullback or a reversal from a downtrend to an upward one. However, when the market crosses the 70 level, we say we are in an overbought status, that most probably the market will make a reversal or at least a pullback or retracement. Okay, this is the way that you should use the overbought and oversold technique. A small tip here, you should apply this technique whenever the market is trending. Trending, that means we are seeing or higher highs or lower lows, uptrend or downtrend. Do not apply this in a range. So let me give you an example here. If I go on the weekly time frame, okay, on BTC, so we have the RSI down below. As you can see, the market, once it crossed the 30 level, we have an oversold here. Okay, This means that the market most probably, or it will make a pullback. I'm talking about this part here, a pullback and continue, or this pullback might turn to be a reversal and then it goes to the upside. Here what we have seen is a reversal. So the market, if we put this the vertical line, you can see that the market reversed from a downtrend to an upward one. So when we have an oversold, you should see a reversal or at least a retracement. But if we have a reversal, then from a downward movement to an upward one. First downward movement and then an upward one for the oversold. For the overbought, it's totally the opposite. Example here. So when the market reach the 70 level and cross it to the upside, that means we have the overbought status. So a lot of buyers bought BTC. It's time for at least a pullback or a reversal. So this retracement might turn to be a reversal. So we were in an uptrend because the market reached the overbought here. So we have higher highs and higher lows. It reached the overbought status. It crossed the 70 level. So we should expect here, when the market crossed the 70 level, or a retracement or a reversal. Okay, so at least whenever we have an overbought or oversold, you should expect first a retracement, then this retracement might turn to be a reversal. And here it was a reversal, and BTC made a reversal from an uptrend to a downward one. I will repeat, use this technique when the market is trending. You can see here the market is trending, higher highs and higher lows. Do not apply it in a ranging market. Okay, it's not that accurate, and this is the flip side of using the RSI. Avoid the ranging market, or to apply it on the ranging market, because you will get a lot of false signals. So this was our video today. We covered how to use the RSI, what is it, and the calculation behind the trend line of the RSI. Thanks for your time, and see you tomorrow with a new topic.